Hello, everyone. Welcome back to the channel. I am here today with Steven at Dividend Streams. He has written many articles for Seeking Alpha. One of the main stocks that he covers on Seeking Alpha is Sofi. Sofi just had their Q3 earnings. Dare I say they pretty much hit it out of the park. The market did not respect them hitting out of the park, except for like 5 minutes when they were up 18%. And so we're here to dissect and break down some of the stuff that has happened. So, Stephen, thank you for coming on. I want to give you a chance first to give a little bit of a disclaimer you have, and then some statistics you want to present, and then we'll get into Q3 earnings.
Yeah, sure. So first, thank you for having me. Glad to talk with you. The prior week with the Palantir podcast was great. So
People
want
loved
everybody,
your free cash flow analysis. I took that as a clip, as a separate video, and it got like 5,000 views
I
independently.
saw
People
that.
people really enjoyed it, so it was awesome stuff.
I'm glad people found value in it. It's a good statistic to go by. And if you look at what Carp has said, it's just a projection of what may happen. But just want to be very clear that anything I'm going to say is my own personal opinion. This is not financial advice. I do not know anybody's personal situation, and everybody should do their due diligence before investing their capital. I have no idea what is going to happen to a stock, and just because I happen to like a position or I may be invested in a position does not mean it is a good investment for you.
Okay, perfect. So before we get into earnings, we had some statistics you wanted to show about Gen Z, so you can start off with
Yeah,
those.
so one of the things I think about, and I want to be crystal clear in this, I have several sections of my portfolio. SoFi is on my growth side, speculative side, but I happen to really believe in the company and I believe in what Mr. Noto is doing. I love the premise of the company. And when I look at stocks like SoFi, just like Palantir, I'm looking at holding this for 5 or 10 years. This is, if it goes to zero, it's going to zero. If it goes to 100 billion market cap, it's going to 100 billion market cap. I have no idea. This is a long-term hold. I'm not.
Re- Real quick before you continue, have you held stocks for 5, 10 years?
Yes.
Like from your 30s and
Yeah.
20s? Okay, so you've actually
Yeah.
held positions for a long time. So when you say
Yeah.
long-term investor, you're not just saying it, like you've done it.
No, I'm not just saying that. I don't believe in, unless the investment thesis drastically changes or there is new information to recalibrate the thesis. I am not looking to hold a stock short term unless I happen to think this may pop because of some type of external event and maybe you can make some money on it. I rarely do that, but SoFi is not a situation like that. If I want to do something like that, I'll go to a casino. When it comes to investing, I think too many people get caught up in speculation and trying to hit a home run in 2 days. The stock market doesn't work like that. And look, I've averaged down, if I added up the amount of times that I have added shares, it would probably be 25 to 30 times, if not more. And
Wow.
I mean, it is what it is. So when I look at something like SoFi, I'm looking at it from, can this company make a mark on society? Is it solving a problem? And where could it be in 2030 or beyond? So something that I did was I really started researching Gen Z and their tendencies. So I found some studies by a company, 99 Firms, and what they reported, and all the numbers I am going to say, none of these are my numbers. They say 95% of teens report they have a smartphone or access to one. 95% of teens report that they spend more than 5 hours per day. I'm sorry, 55% of Gen Z uses their smartphones for 5 hours or more per day. 74% of Gen Z spend their free time online. 85% of Gen Z use social media to learn about new products. 71% of Gen Z watch more than 3 hours of online videos every day. So that's good for you.
That is good for me.
You
Yeah.
make a lot of content. That's really good for you. That's where the demographic is moving today. 80% of Gen Z aspire to work with cutting edge technology. Now, Gen Z was born between 97 and 2012, placing them between the ages of 10 and 25. This is from a Bank of America research article, and it was cited in Business Insider. In a little over a decade, Gen Z will be taking over the economy. Gen Z currently earns 7 trillion across its 2.5 billion person cohort. By 2025, that income will grow to 17 trillion. And by 2030, it will reach 33 trillion, representing 27% of the world's income and surpassing that of millennials the following year.
Hmm.
So when I think about that, you and I are both fans of Palantir, but Palantir does not have a consumer product. It's an enterprise solution,
Yep.
whether it's private entity or government. Financial services is never going away.
Yep.
No matter what, everybody is going to need some type of financial service. Even Elon Musk needed to tap the markets to acquire Twitter.
That is true.
So it doesn't matter how much money you have, there's always going to be some type of life event that you need to tap the banks for. You need to put your money somewhere. Most people are going to need to get a loan for a car. They're going to need to get a mortgage. They're going to need to refinance student loans. They're going to want to invest in the stock market. They're going to want financial advice from a certified financial planner.
They might start a business, need a loan for that.
They may start a, like you at your startup, may have to get an equity line, may have to get a loan, may need to do a seed round for capital. But financial products are never going away. This isn't a soft drink that somebody's going to make a better mousetrap on, make it
Yeah.
taste better, lower the sugar. Finance is finance. So I look at it when I look at my nephew who's 6. I think about what is he more likely to use when he starts working that first part-time job when he's 14 or 15? What's he likely to use when he gets into his early 20s, gets out of college, does whatever he's going to do? By that time, and even look, at 6 years old, he's got some ways, but what is the generation now that has a part-time job? What are they looking to do? Where are the people that are getting out of college or starting a business or being an entrepreneur? Where are they going to put their money? Do they
Right.
really want to deal with the traditional bank? I'm not saying traditional banks are going to go, but what I'm saying is I think there's a chance SoFi really catches on. And when you look at the trends, it looks like it's catching on. And I think that it can have a huge mark going down the road. And that's why looking at the 2030, I think that this is a story that can continue to unfold. And the banking charter was just one of the most important things that could have happened to this company.
So I want to back up a little bit before we get into earnings, actually, to give some more context to
Sure.
who you are. You sent me an interview of, or not an interview, a keynote by Anthony Noto, I think 3 months ago. Um, and it was him giving a talk at Stanford. And when I listened to it, probably a month after you sent it, I finally got why the second text you sent me, which was you need to listen to this interview. And so, when did you first hear about SoFi? When did you initiate a position? And kind of how did you get into learning about this company in the first place for you to eventually have the conviction you have about it potentially being the Bank of America by 2030?
You can thank the good doctor, Tyler Oakland, for that one.
Wow, he got you into SoFi.
He got me into SoFi.
Interesting. So he just tweeted about it. You came across his tweets, or did he reach out to you?
No, we started talking because he had published some articles on Seeking Alpha, and I read his first Palantir article, and we connected and we were talking, and I did not even know SoFi. And he's
Mm-hmm.
like, you got to look at this company. I started looking into it, and I had heard of Anthony Noto before. And the more I looked into it and what their mission was, I think their mission is what really got me because it's not often that you can invest in a company where the mission is so powerful for what they're trying to do for society.
Right.
And that really got me. So I started looking into it, and lo and behold, do you have one of these?
I don't have one of the cards yet. No, not yet.
Oh, so yes, I'm a member.
Wow. There you go.
So I actually do own SoFi shares in a SoFi account.
I love it. I love it. That's awesome. Okay,
And
cool. Go ahead.
uh,
No, continue. Continue. Go ahead.
no, I was just gonna say I did that. I'm not sure what I did before I bought shares, but pretty early on, I opened an account because I wanted to see what the product was.
Yeah.
I liked it. I mean, it's not as robust as using Thinkorswim from Ameritrade,
Right.
but it gets the job done. It's very engaging. It's a very well built product, and it's really come a long way. And they're doing great things with it.
So you weren't were you around when Chamath was taking it public, or this was after that whole
I
happened?
learned about it after.
Okay. Yeah, same thing with me. Same thing with me. Okay, so then let's talk about earnings. Obviously you're an interested shareholder. You care deeply about how this company does. Q3 earnings were pretty amazing. I mean, they beat revenue, they beat a lot of stuff. Member growth was really nice, obviously, and I'll link your article in the description for people who want to see all the specific numbers analyzed. What were your raw thoughts when the market reacted the way they did? And then what were your thoughts in general about earnings before we get into the specifics?
Yeah, my raw thoughts were they had a great quarter. SoFi has faced a lot of adversity, just like a lot of companies have, and especially with the business they're in and their number one business being slashed by more than 50%
Yeah.
due to the horrible pandemic. And I look at it, Anthony Noto and his team are true operators, and in the face of adversity, they grew their other businesses, and they're not a one-trick pony. And I think that this quarter, for me, really showed that this is a company that no matter what the curveball is, they're going to find a solution. They're not going to back down. And I think that the growth across the board, people can talk about, I think you and I maybe talked about this, but people can talk about growth slow.
Yeah.
But is growth really slowing? You know this probably better than most people because you're a startup. How easy is it to get tremendous percentage based growth in the early days?
So our first month we reported my earnings, my monthly investor update. We had 1,800% user growth. Now, user growth wasn't bad, but it was going from like 30 to 400 or something. It wasn't crazy, right? Anything like that. And then the next month it went down to 100%, which is more reasonable, right? Versus 1,800%. So obviously, if you go from $10 to $50, you increase revenue by 500%, but it's $50.
You're always going to get those pops in the initial early stages. It's so much easier to go on a percentage basis higher. But when you start talking about the raw numbers, this is a company, the line may not be going straight up the way people want it to,
Right.
but it is modestly growing respectfully. I mean, I thought the member growth was great. I
They're
think to the
closing in on
point,
almost 5 million members now.
a lot of people speculated we wouldn't get there for 2022. We're going to get there, I would think. I think it's football season. You have all the games at SoFi Stadium. I don't see how they don't surpass 5 million 2022. And look, there's a roadway to hit 10 million members in the next couple of years. I mean, they are growing at a very quick pace, and every member that they have creates a word of mouth possibility. And their cost of acquisition may come down over time, especially with rates. Who else is really giving a 3% on checking and 2.5% on saving?
Yeah.
You look at the traditional banks and people can speculate about why that is. And I'm not going to get into my thoughts on why that is because it's hearsay. But the numbers don't lie. That is what SoFi is offering. And to me, that's very enticing. I think to a lot of people, that's enticing. I think they have a number that's going to be much above what the norm is in the industry. That's also another factor. And I think we haven't seen a full year of the bank charter. And you got to remember, a lot of this growth came prior to the bank charter.
Right.
The OCC, my opinion, it's not handing out a bank charter to a company that's going to go under in 2 weeks. Now, they are very strict with the regulations. They are very strict with the due diligence on who they give bank charters to.
Right.
So now that they have the bank charter, it gives them a level of, I want to say that it would give somebody a confidence level putting their money in there because they are a national chartered bank.
I was just about to back up on that for a second. Can you actually break down for someone who has no idea what a bank charter is? Like, what does that do to establish credibility to an up and coming fintech, I guess, that's in the financial services place?
Yeah, I mean, I'm not a banker, so it's hard for me to really answer that question, to be very honest with you. I don't want to give, I'm pretty sure I have the answer, but I don't want to give incorrect information. I want to stick to numbers and all that type of stuff. But I think just from me personally, when you are a nationally credited bank, it means something.
Yeah.
And we'll get into what that means for neobanks and everything else a little later, because I'm sure we're going to talk about the fintech of, you know,
The AWS of
AWS of
fintech. Yep.
fintech. Yeah, it's
Love talking
exciting
about that one.
stuff. It's great.
Yeah, and my understanding is because they're a bank, people can actually deposit their money there, and then they can do stuff that traditional bank does.
Well,
But yeah,
yeah,
both, right? Yep.
in that respect, it allows SoFi to lend off its balance sheet from its deposits. It doesn't have to go to the warehouse. It doesn't have to go to other banks and borrow. So their
Right.
cost of capital comes down. So if that's what you're asking, that I'm 100% comfortable answering, because that's not speculation. That was the big thing, because prior to the rates going up, I think SoFi's cost of capital was 2.2%. He said, no, Mr. Noto said it in an interview. I'll link it, I'll find it. And if it wasn't 2.2, I apologize, but that number is sticking in my head. And he was saying that because the number would go down significantly, he is able to give more on interest to his members because he has a much better spread than if he's borrowing the money from another bank or the warehouse.
Right.
So
Okay. No, that makes sense to me. When I remember they got that bank charter news, and that's when I wasn't a shareholder, and I was like, okay, cool, you're a bank. It's like because my perception of banks was that they're boring businesses, and then when I actually got into SoFi, and I was like, oh, people, there's a reason banks are boring businesses, and the reason why people don't care that much about Bank of America and J.P. Morgan Chase. There's a reason why I'm attracted to something like a SoFi product, especially because I've been using Robinhood, and like there is a digital millennial or Gen Z play here. I want to talk about deposits. You write in your article, the major traditional banks have seen their deposits decline quarter over quarter once again, and SoFi has delivered 335% deposit growth in the past 2 quarters. They received they received the banking chart in Q1, finished Q1 with 1.16 billion in deposits. They've added $3.88 billion of deposits since Q1, contrast to the banks that have seen their deposits decline. And this was the big thing you told me about that was very surprising to you. Can you speak a little bit on why that matters to you?
yeah, so first, I didn't cherry pick any banks. These are the banks that I am familiar with. I don't bank at a regional bank. I'm not really familiar with regional banks. JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, UBS. Those are the banks that I know. So those are the banks that I used for my analysis. So what I wanted to do, since I become a SoFi shareholder, when I see the quarterly reports, I go to each of their balance sheets and I look at their deposits because I want to see if the big banks are growing and I want to see if SoFi is growing.
Yep.
And regionals may be growing. I didn't look. I'm not too familiar with them. The only one that I'm familiar with is New York Community Bank. Not really familiar with any others. But the proof is in the numbers. You can go to any finance site, Yahoo Finance, Seeking Alpha, any one you want to go to. You can look at the balance sheet. You can look at their deposits on a quarterly, trailing 12 months, or annual. The majors are seeing a decline in deposits.
Yep.
Now, what that means, a banker could explain, but we can speculate on what that means. But you look at SoFi is not going down. SoFi's deposits are growing, and they got the bank charter at the beginning of Q1. I think he got notified on January 18th, if I remember correctly. And I think that it got implemented sometime in February with everything coming online. So I think they had half the quarter of Q1. And they finished with 1.15 billion in deposits. And in, call it 7.5 months, they've grown, well, 6 months, they've grown it by 3.87 billion. And in 7.5 months, they've gotten to 5.03 billion in deposits. We haven't even seen what a full year looks like.
Right.
And it's important because one of the main ways that SoFi will generate revenue is from net interest income spread
Yep.
on lending out money. So
Yep.
the more deposits they have, the more money they'll be able to lend out against the deposits. So that's why I think that this is a very critical and important metric, because we're seeing billions and billions go on the balance sheet of deposits. And we're seeing these numbers decline from the big banks. If that's a real correlation, I don't know. There's not enough data right now. But in the short time that we have, I'm taking that as a bullish sentiment that people are comfortable putting their money with SoFi and that they are growing members.
That also means that their members are engaged, right? Because it's kind of like Twitter that has hundreds of millions of users, but a lot of them don't ever tweet or even check the app. Um, so SoFi, they said they're closing in on 5 million members. Deposit seems to be positively correlated. Like if your members weren't engaged, they wouldn't be depositing their money, or they wouldn't be using your products or even using SoFi Invest. So $3.8 billion more of the past 2 quarters deposited, at least at some level, shows that there's a percentage of those 5 million members that are using it as their bank and not Bank of America. The same.
Yeah, I would think so. And the big carrot is Mr. Noto was very smart. The whole direct deposit. He wants you to be using direct deposit there. And that's how you're getting these large interest rates that you're not getting at these other banks. So I think you just
Why
hit
does
it on
direct
the head.
deposit mean you get better interest rates?
So if you read the disclaimer, I don't have it on my screen, but I believe in order to get, let's bring it up on
Oh, it's
SoFi's
in order to get the
website.
3%, you got to
Yeah,
do
I
direct
think you have to
deposit.
be direct deposit, and that's important because that means your paycheck is going right
Right to
into
SoFi.
SoFi. It's not
Right.
going anywhere else.
Ah. Oh, interesting. I didn't even know that. Right. Okay. So that gives us a better understanding of what they're doing there. All right. So let's transition to student loans. And so two questions.
Yep.
Did you hear anything in earnings that gave you some things to think about when it came to the student loan business? And then B,
No.
okay. So then B, given the student loan moratorium is ending in January, um, what are your thoughts on SoFi's refinancing business once that ends?
Yeah. So I think that this is a moving target, and we have to go by the information coming from the administration and not by anybody else. So right now, it is set to expire end of December. I think January 3rd, maybe, is when student loan repayments start again. If that changes, there's only a couple people that know. I'm certainly not one of them, but
Are you sure you're not one of them?
I'm not one of them. Trust me. Wish I was, but I'm not. So let's operate right now as if this is going to happen. The average student loan debt, I believe, is 70,000.
Yep.
The forgiveness, if you meet the criteria, is 10,000 and then 20,000 if you have a Pell Grant.
Yep.
So on the average 70,000, you're either going to have 50,000 or 60,000 left.
Yep.
Right now, there is not an incentive to refinance, because once you refinance, you're taking a government loan and you're privatizing it. So you have to start payments. Now, people are going to refinance. My opinion, people are going to refinance.
Why?
And, well, depending on what the Fed does, most likely they're still going to have a higher rate from the government student loan that they could get refinancing. And when that happens, you're going to open up a line of business that has been stonewalled for 2 years, 2.5 years. I mean, I don't remember the exact date. I think it was May
Yeah.
of 2020 that it went into effect.
Yep.
I mean, it's been operating at less than half mass, and people are still going to have to refinance $50,000 or $60,000 in student debt. And SoFi is one of the well-known players in that area. And can you bring up the slide that I did with the graph about the loan originations, please?
Yep. Here's okay. Members. He wrote a lot of stuff here, so.
Yeah, this was a longer article.
All right, there we go.
Thank you. So this is very important to me as an investor because if you look at Q1 2020, prior to the student loan moratorium going into effect, that was SoFi's largest loan lending segment at over 2 billion in that quarter of loan originations. Obviously, that dropped significantly, and we saw a pop in Q4 2021 when it looked like it was going to be ending. People started refinancing. But
Right.
through the adversity, look at what personal loan originations has done.
Wow.
It
This is a good
has
chart.
surpassed where student loans were at Q1 2020, and it's been growing. So for me, this is very bullish. And as I said before, I'm looking quarters in advance, years in advance. And when the student loan moratorium ends and people start refinancing, you're going to most likely see that blue line get back to where it was. And there's no indication from what has happened since Q1 or Q1 2021 or Q4 2020 that personal loans are going to drop off. So now you're going to have two businesses instead of one that are generating over 2 billion quarterly in new loan originations.
That would be personal and student. Yeah, that's and so when so and this just means SoFi gets more interest on these loans, right? The more loans they give out, it's like a basic lending business at that point.
Yeah, I mean, the way I look at it is they're not lending money out of the goodness of their hearts. They're lending money to generate net interest income to drive the bottom line. I mean, this is one of the ways that they make money. So, regardless if it's student loans, regardless if it's personal loans or home loans, if SoFi is lending money, they're making a spread on it. Now, I've seen people discuss it's not a great business to be in, et cetera, et cetera. Not a banker. I don't know, but everybody needs personal finance, and many people take loans. And SoFi goes after high quality. I think the FICE is 760 or 750, something around there. Their average income is mid 100,000 range, somewhere in
Right.
there. So they're mitigating their default rates by doing that.
And do you see so obviously there's a lot of lending businesses, there's traditional banks, there's lending club. Do you see as a shareholder some unique value proposition to SoFi doing lending kind of as like it's a one-stop shop where you can do lending, loans, maybe get people into that's like a top of the funnel thing to get them more into it. What is the unique reason SoFi doing lending could be good for their business outside of the revenue they generate from it?
I think you just said it. It's a one-stop shop. I think at the end of the day, people want simplicity.
Hmm.
If I can have everything in one place, why wouldn't I want to simplify my life?
Yeah.
So if you can have your basic banking, you can have your loans, and you can have your investments in the same place, and you're getting a quality service and you're getting treated correctly, and everything is seamless transaction, seamless integration. I think that's where they have the edge. And look, at the end of the day, you're not meeting these people, so a loan is a loan. So yeah, sure, there's going to be many companies for that, but when you're doing all the paperwork and you're doing everything, isn't it easier to theoretically have everything at the same place that you have your money? And that's the way I look at it.
Have you taken out loans in your personal life that have been complicated to be able to execute, or you
No,
don't have experience with that? No, you just make too much money, so you're good.
I wouldn't say that, but no, I have not had the pleasure of complicated loans.
Complicated loans. Okay. Let's move. So I want to put a wrap on this segment. You think digital banking and personal banking is the way of the future based on the statistics you've shown me, which kind of adds some validity to that claim. And that people like me at 25 are not going to want to deal with Bank of America. We're going to be attracted to seeing SoFi Stadium at the NFL. We're going to be attracted to seeing 3% yields. So, and that is a very big bull case on the trillions of dollars of opportunity and revenue that my generation will generate to go into at least one of these new banks, which would be something like SoFi.
How often do you visit a bank branch?
Last time I visited one was when I helped my videographer set up his LLC, which was like 7 months ago.
Okay. So would you say it's an accurate statement that the necessity to go to a bank branch has declined over the years?
I would say that is correct. And I would say when I got there and we had to open up a basic LLC, they made us get on a webcam video call with someone in Texas to like do the process in a New Jersey bank with some. And I'm just like, why are we staring at, like, why can't we just, it blew my mind. And we were there for 5 hours. So I would say, yes, it's a little complicated.
So if the need for a traditional brick and mortar location is declining, I think that there's a good chance that the younger demographic would gravitate toward SoFi rather than one of the traditional big banks. But that's a personal opinion.
Okay. But to push back on that, do you think Bank of America and JP Morgan would just let that happen under their nose? I mean, they're not idiots, right?
So not Jamie Dimon is one of the best CEOs you could ever want running a company. So no, they're incredibly smart people. I'm actually shocked that SoFi hasn't been acquired, to be very honest with you.
Hmm.
Don't want that to happen, but I'm shocked that it hasn't been. And I think you're going to see the bank apps get better. And if you look, JP Morgan is redoing their back end. I forget the company that they're using, but they're making a huge capital investment moving toward a cyberbank platform.
Hmm.
So you're going to see competition. But to my knowledge, nobody owns the critical pieces the way SoFi does. And when you start talking about Galileo and you start talking about Technesis and you talk about SoFi having the bank charter, it's a trifecta that nobody else is matching. It's
Right.
going to allow them to outmaneuver. They're not on an archaic banking solution that was developed and then had band-aids and fixes and patches. They are now building everything on single core cloud technology. They're able to you see the products that they're bringing to market. I'm shocked how many they have. And one of the big jokes that I always say is, I didn't even know that many financial products exist. I mean, it's really amazing
Yeah.
for them to be able to figure out what their members want and deliver it. I don't see that from other banking institutions. Now, I'm not
Okay.
saying they're not going to do it or they're not doing it, but I mean, I probably don't see it because I follow SoFi a lot closer than the other banks. But
Well, I think they would have made a splash by now, at least a little bit. I mean, I know Goldman Sachs is Marcus and stuff like that, but it's not kind of at the name of or the exact thing, all the pieces that SoFi has. Also, I think there's an argument they might just be waiting for SoFi to get big and let them do the hard work, and then they
you
clear
talk
house.
about Goldman, Noto is an ex-Goldman exec. And
Yeah.
if you look at SoFi's board, I believe the ex-COO is a board member.
Yeah. Yeah. Before we get into the fun stuff, which is Galileo, we got to clean up some dirty laundry. What would happen to your investment thesis if there was a reverse split?
Nothing.
Why? Because
Because it
that's a
won't happen.
bad thing, right? That's not a good thing,
No,
right?
everybody thinks it's a bad thing. It's all perception. You still own the same amount of the company
Yeah.
on a percentage basis. So it's all perception. People look at reverse splits as they are bad because their share amount is decreasing. And there is a mentality of how much you're making per share. Your percentage basis of the amount of the company your shares represent does not change.
Right.
Whether the shares stay where they are or if they go 100 for one, they do a 50 for one, whatever it is, you own the same percentage. The market cap of SoFi is not changing. So regardless if they do a reverse split or not, their market cap, what is it, 5.3, 5.4? I didn't look today. If their market cap is 5 billion, they do a reverse split, and then 2 years later, the market cap goes to 10 billion, you're making 100% on your money, whether there was a reverse split or not. So do I want to see it happen? No. Is a reverse split going to change my thesis? No. I would want to see why, and I would want to see the reasoning. I know the reasoning that they said originally, but they haven't done it yet. So if they do it, I would like to see the reasoning why. I don't think they're going to do it because the short interest has declined significantly. If the shorts were still over 20%, I think there's a better chance of it happening than not happening. But when I checked, I believe the short interest was under 13% as of October 15th.
Yep.
So that makes me a little bullish on the idea that we're not going to get a reverse split. But we'll see. It's not the end of the world.
Got it. Okay, so give me 1 second real quick. My headphones are being a little stupid right now. Let me change that. Can you say something?
Yeah, I can hear you.
Okay, good. Okay, so Galileo, AWS of fintech. This has been theorized about a lot. This is what got me into the company. Obviously, I'm a Palantir bull. I like platform-based companies. So the personal banking stuff was a cherry on top for me, even though I know for a lot of people it's their thesis. For me, I was like, wait a second, if they have this thing and this thing scales, this is really cool. So I know it's a cliche. We've heard AWS of fintech, but for someone new that's listening to this podcast that doesn't know too much about SoFi, what does that bull case mean to you, and what does that mean to you as a product when someone says SoFi could be the AWS of financial technologies?
Before I give you my thoughts on it, you have a startup.
Yes.
You're hosting, for people who don't know, what is your startup?
So my startup is a content-based platform that is trying to essentially become a YouTube of audio. We are centralizing audio content that's uploaded, and then we are trying to use algorithmic mechanisms to target people that care about getting the best audio in their feed and recommend that audio to people. And we are hosting the back end of all of that content. We have over 15,000 pieces of content on our platform using AWS.
Okay. Now, previously, you would have had to have a server room with on-prem to store everything because you're dealing with, while it's not video, you said 15,000 pieces of original content.
Yeah.
That's a lot of space.
Yep.
How beneficial would it be for you from an expense side if you owned AWS?
If we owned the entire infrastructure of AWS?
Just the premise of it. If you didn't have to pay those costs and it was your raw cost because it's your platform, forget how much money AWS makes. If you own the actual cloud hosting environment,
yeah,
your expenses would drop considerably.
Yes, that is correct.
Okay. So I get excited about the AWS of fintech because what it is going to mean for SoFi, not what it may mean. Start with expenses. Technisys acquisition, people didn't like. I loved it. SoFi issued stock. And when you look at their expenses, transitioning SoFi's checking and saving and credit card to the technology stack will create 75 to 85 million in cumulative cost savings from 2023 to 2025. Then from 2025 forward, they are expecting between 60 to 70 million of cost savings on an annualized basis. So they're going to close out the decade between 375 and 435 million in savings from hosting their banking platform.
Because they own it.
Because they own it.
Because they own it, right.
In addition, they estimated that this acquisition would add between 500 and 800 million in cumulative revenue through 2025. So let's really think about what that means. They own the back end that it's built on, cost savings and revenue generation, but they control their own destiny. It's not just about what they're going to save, and it's not just about what they're going to generate in revenue. It's more about They do not have to call a vendor. They don't have to get somebody on the phone. They don't have to wait for a product to be delivered through a roadmap. If they want something, they can build it on the spot. They can dedicate their engineering resources. And this is why they're going to be able to bring products to market quicker, I believe, than anybody else, because their entire infrastructure will be built in-house. And when you talk about Galileo, Galileo is the entire back-end payment processing. They just got the Visa certification, and you're talking about a real trifecta where they are developing back-end processing with cloud banking, and they have a banking charter. So now they can take that product that they built for themselves, and they can do what Amazon is doing with private label. They can do what any of these other companies do with private label brands. They can go to a neobank. They can now sell them the exact product that they're using, brand it with their branding, and sponsor it with their bank charter. So there's a huge opportunity. Now, when you go outside the neo and challenger banks, you have regional banks that, this is me speculating, if they want to stay relevant, thrift banks also, they're going to need to upgrade their technology. Is it really feasible for them to build everything out with a third party, or is just going and licensing this stack from SoFi a better option? So I think that there is a huge amount of potential and possibilities for revenue in the future, in addition to efficiencies and development greatness that this is going to create for SoFi. And I think we really are going to see a lot of good things. They have a very strong team around them. And Galileo had 120 million accounts. They deal with a lot of companies. Think about cross-selling. No, they're going to be able to cross-sell to some of their companies this stack also. And then when they go into an RFP and companies are vetting them, they say, oh, wait, we have this. We can do this. We're coming with payment processing, but you can do all these other things. You can build out whatever you want on this platform. They're going to be at the upper tier when companies are interviewing multiple prospective vendors to build out their product or get solutions from. So this is very exciting for me.
When it says Galileo reached 124 million accounts, what does accounts mean? It means payment processes were done
Yeah,
within all those.
I think it's cards. I would believe the way I know Robinhood used to be a client. I don't know if they still are. I've only heard of one company leaving their ecosystem, but every card that is issued through Galileo, I believe that they get a very small transactional fee whenever it's used.
Right. And so Technesis, I didn't even actually or Technesis, however you say it. There's
However,
always a
I
debate.
don't know how to say it.
I don't know. We know what we're talking about. So that I didn't even know this. That was that buying that not only was for the opportunities in the future, but now they're running SoFi, the company's operations in-house. As you said, now the analogy makes sense. Would you like to own AWS, right?
Yeah, so they're vertically integrating, and I think that the first product from Galileo was just launched on it, and over the next couple of years, all of SoFi's products will be on that single core multi-tenant from them. And that's where you're going to see all these savings from.
Yeah, that's interesting, and I didn't even fully understand or grasp that. And that's so people hated. I wasn't around 200 days ago when they made the acquisition. So people hated that acquisition because of the stock dilution. But you're saying there's a much bigger picture here when it comes to this.
I hate being diluted. I dislike it. Dilution is the silent killer of capital, in my opinion. There are a lot of companies that just dilute their shareholders. I'm not going to name any companies, but stock-based comp, everybody likes to talk about. And one of the problems, look at Palantir. They
Yeah.
have to issue stock-based compensation because when you're competing against Google, Amazon, and Microsoft, you don't have the war chest that they have. It's a cost of doing business. I wish it wasn't the case, but it is. And I don't think the dilution in this case was a huge deal because they got a proprietary asset that is going to, I believe, pay off in spades in the future. And when you own Galileo and you own Technisys and you have the bank charter, what's that worth in equity? What's that worth in value? And regardless of what the share price is today, it's the value added for members and being able to deliver products time and time again as quickly as possible because all they have to do is have an internal meeting, draw it out, and build it. They don't have to get on the phone. They don't have to go to a vendor. They don't have to do any of that.
Yeah. No, this is really really exciting. Now, obviously, Galileo has competition as well.
Of
You
course.
think of Stripe. I mean, that's like a big B2B pay. But so you think this is unique because SoFi is not just a loans company. It's not just financial services. It's not just payment for order flow. It's all of these things integrated with a digital suite of services, and that it has this massive B2B sort of play to it. And then you look at the valuation and you're like, wait a second, there might be something here that doesn't just exist in a Stripe. Because Stripe is not synonymous with digital personal banking, it's synonymous with payments. But when you think of SoFi, they could be synonymous with both, or at least get 20% of one, 15% of one market, and it creates this cumulative product. That is where you're seeing an excitement as a shareholder.
I'm seeing an excitement because I do see them becoming a top financial institution somewhere in the future.
Hmm.
Whether that's 10 or 20 years out, I couldn't tell you.
Yeah.
But if I was going to bet, I would bet that it happens rather than it doesn't happen because they do everything.
Right. Okay. I have another question for you. Are you familiar with stocktwits.com?
Heard of it. I may have gone onto it once or twice. I don't use it.
Okay, it's Twitter for stocks. So they have ticker symbols. There's tags. They actually came up with the cash tag, that thing on Twitter that people use to reference stocks. StockTwits came up with it, and Twitter actually stole it from them. So if I go on
Wow.
hashtag Palantir, hashtag SoFi, there's a bunch of content underneath it. Anthony Noto used to work at Twitter, very familiar with short form messages.
And he
And
was a COO.
right. And social finance to me at some level means one of the differentiating value props of your product is that there's a social component to it. That's why you can follow people and see what stocks they're trading versus just the boring I invest today and I invest tomorrow. Like Robinhood, I love the app, but there's not much to do other than do my trades because there's nothing to look at in terms of content. Is there a world in which you think SoFi should actually become, either through acquiring something like StockTwits or building internally inside, a content play? We know content is the way of the future. We know user generated content drives massive levels of attention and it makes things really sticky. You and I are probably daily active users or at least weekly active users of Twitter. Would that be a smart thing to do given Noto's Twitter background?
Yes. The short answer is yes. The little bit of a longer thought out answer is finance has changed. It's not taboo anymore. People talk about it and, you know, people engage in conversations around what they're investing in, what they're interested in. I have conversations about dividend plays all the time with my friends because I'm mainly into dividends and
Yep.
I love them. But I think it is very likely, given that Anthony Noto helped build Twitter, as you said, he has the knowledge and its engagement, as you said. Now, it's about keeping people on the app, differentiating themselves. And if they build out that aspect where you can follow somebody, you can see what they hold, not how much they hold, but what they hold. And make it an engaging community around it, I think you're going to have more users gravitate toward that because the younger generation we're seeing, I'm victim of it. I spend a tremendous amount of time on YouTube, tremendous.
Yeah.
I think that if I had to pick between cable TV, which I still have, and the different streaming services,
Wait, hold on. Why do you have cable TV still? There's this some content you enjoy on it?
yes,
Wow.
CNBC.
But you can get that on like YouTube TV, right?
I don't know. I have cable TV. There's a lot of networks that I do like. If I stop on it, there's stuff that I
There's
watch. I like
content for you.
TV, but HBO, unless it's one of those shows, I spend most of my time if I'm watching something on YouTube because think about how much information you're able to consume and how much you're able to see now versus you were 10 years ago. You could never see these TED Talks. You can never see these interviews like the one that I sent you with Anthony Noto. You can find them all on YouTube. So I think that engagement could add a differentiator component to SoFi that these other companies wouldn't be as successful because they don't have an Anthony Noto building it who has already done it before.
Yeah. Yeah, and obviously you made a great point about seeing TED Talks and all this stuff on YouTube, just sending links. Like if I'm on, I used to use StockTwits a lot. I mean, I still use it. I'm on Twitter, but the way these apps keep you hooked is they send you a freaking notification, right? SoFi sends me a Meta has a new 52-week low every day. Shout out to Meta, getting a new 52-week low every day. But like they drive me back into the app because I'm like, oh, I want to see how Meta's doing. If they had dividend streams added you, hey Amit, check out this article. I mean, like that's real. That's like a real social play, especially if you build a community around finance and stock. Because like on LinkedIn, no one, my camera just let me turn that real quick. On LinkedIn, no one is speaking about. Let me plug this webcam in because I have a new computer. So
Oh, what'd you get?
I got an NVIDIA GTX something thingy majiggy something that.
Yeah, I was going to ask you what type of setup you have given all the content you create.
Yeah, it's not even anything that I'll show you right after this. There's nothing that fancy. Um, so I'll cut this part out. So like on LinkedIn, no one's posting that much about religion or politics because literally the algorithms are just not going to push it. Like LinkedIn, they show to their users, hey, we don't want this stuff. Don't put this here. Show us like your job updates and stuff. If you create a community on SoFi Social where people are actively talking about investments and it's like a real engaging piece of dialogue, there's articles, all this stuff. That community can grow. You already got 5 million people. That community can grow and grow, and it's a sticky app. And then you start doing more trades. They include options. There's so much potential there, and I think that's a really bull case to at least keep people engaged with the SoFi brand by building the actual social component of it onto the platform, which involves content. Now, that means you've got to also have a ton of content moderation because people are going to say some crappy things about stuff, and that's a whole nother problem that SoFi would deal with. But I think the costs outweigh the benefits outweigh the costs.
Yeah, it's interesting. And that's something where obviously their lawyers have to really look at it. And you need to look at the SEC stuff. And there's a way to do it that can generate added value. I'm sure they'll figure it out. But if anybody's going to do it, I would give the edge to them over a Bank of America or a JP Morgan Chase.
Yeah, Bank of America is not introducing a social finance Twitter-esque platform. That's probably just not going to happen. Yeah.
And if Anthony Noto happens to watch this, I would love a Thinkorswim platform from SoFi.
When you mean Thinkorswim, what do you mean? You mean like a really sophisticated investment product?
Have you ever used Thinkorswim or seen the videos on it?
Once I use Robinhood because but I've used it once. I've seen how it looks.
So it is very intuitive. It's very in depth, but it gives you so much information. And I like looking at economics. So I'm on Trading Economics Live, looking at all the different data points. Thinkorswim's got everything built in. Once you learn how to use it, you never have to leave the platform. Has everything real time, level two, very robust. And
Right.
I would love a product. It's like eTrade Pro. I think it's better.
And do you pay for it or is it free?
It comes with the account.
And the account is, and yeah, yeah, that makes sense. That makes sense.
Yeah, if you want, just go to YouTube and just watch a 3 minute video on it. I think you'll, or just look at some screenshots of it. You'll see how in depth it is. I mean, I think that that's what SoFi needs to look at because look, people are trading stock more often this generation than previous generations.
Yeah. Yep.
And that's a tool that a lot of the younger generations, I believe, would use because it's very in-depth information, real-time charting. I think that a platform like that should be introduced at some point.
Yeah. Okay. Makes sense to me. Thank you, Mr. Well, I guess here's my last question, the last 2 minutes. What is the bear case for SoFi? I mean, obviously, there's a lot of things that can go wrong, but what is one thing that if it happens, it's like, this is not what we thought it could be?
what I'll say is the Bears have not been wrong so far. Short term, they've been correct. And there are not a lot of stocks that have been working in this environment. Energy's been working, but I mean, Apple just reported a $99.8 billion net income for the trailing 12 months. They just finished their fiscal year and they're down.
Yeah.
If Apple's going to go down, generating what is the most profit ever in a year, nothing's really going to do well right now. My
That's a
opinion.
tweet. I'm gonna steal that. That's a tweet. That's a
You can
tweet.
steal that. That's fine. It's my own opinion. You look at what were the safe plays and what everybody wanted to go into your Amazon. Amazon's no longer a $1 trillion company. Your Google, Meta, Apple, they're all down. So it's a hard environment right now. And the bear case is competition. The Bears, I believe, are correct because it's their opinion. We talked about this. Everybody is entitled to their opinion, and that makes them correct in their own perspective because that's what they believe, and that's fine. Absolutely fine. You have a rising rate environment. SoFi is a young company. It is not generating a profit. That is looked down upon. Their costs are large, stock-based compensation, and people think that the big banks, the traditional banks, are not going to take this line down
Yeah.
and they're going to beat them at this game. Could happen. I don't know. But you look what Elon did. I have changed my views on Tesla somewhat. But you look what he did. You got to give this guy all the respect in the world because he went into an industry where the barriers to entry are one of the most immense ever. He took the
Yeah.
fight to Ford. He took the fight to GM. He took the fight to everybody and succeeded. So it is possible to change an industry. He is proof of that. Tesla is proof of that.
Yeah.
So can SoFi work? I think it can. Do these other companies have blank checks that they can do whatever they want to expand and try to take the fight to SoFi? Absolutely. We're going to have to see how the story plays out. And I think competition and the war chest that these other companies have is probably the biggest threat to SoFi. But that being said, when you have 4,000 branches, how nimble can you be?
Yeah.
So I don't
I also think
know.
it's I also think it's a bet on Noto at that point, right? Elon did that. Like Tesla did it, but Elon did that. And at one point we're trusting Alex Karp. We're trusting Anthony Noto. Like we're trusting the guy and we're thinking he's the guy to get it done.
Well, you got to give
And
a lot of credit to the team too. I mean, Elon
yeah.
deserves all the credit in the world, but he didn't have the JV team with him.
Yeah.
I mean, he had a team that got after it and they succeeded. So where there's a will, there's a way. And yeah, you said it. We're betting on him. And I think everybody who is interested in SoFi should go listen to his speech from Stanford University. It is one of the best speeches I've ever listened to from CEO. It's phenomenal. I mean, I
It,
sent it to you. What were your thoughts on that?
it was amazing. It was the leadership, the analogies that you can tell given his football history. I mean, it's everything. It was like I trust this guy with my capital. I don't know if he's going to succeed. It's always an investment. It's always a risk, but I trust him that he's going to try. I really do.
There's always, whenever you're allocating your capital, there's always a risk
Yeah.
that it's not going to go well. But this is a guy who has been tested. He's a veteran. He's an operator, and he has a clear vision and he has a track record of executing. So I feel comfortable with him at the helm. I feel comfortable with the team. I've listened to the conferences with LaPointe, the CFO. I think they're going to do big things. If that happens, remains to be seen. But when you look at content and you look at the way that the younger generation is using technology, I see them being a winner in the space. And one of the things they need to do is they need to get some type of integration with Zelle, because I think that that will really, so a lot of people are probably waiting for that before they move over, because that has become ingrained in a lot of people's
Yeah.
finances.
Yep. Yep.
I think that's all going to come. There's things that they need to do. It's not out of the woods yet. And like, earnings were good. You go through that, they're good. This is a company that has raised guidance 3 consecutive times. A lot of companies are not raising guidance 3 consecutive times, and they're doing it without student loans. What happens in 2023 when you have a full year of the bank charter? You have student loans come back. If they come back, they should. We haven't heard anything that they're not going to. But what happens at the end of 2023 from a deposit standpoint, from an EBITDA standpoint, even from a net income standpoint? And I think that it could be rough seas for a little bit, but for long-term investors, I'm not seeing anything in the balance sheet that makes me worry that they're going to be in trouble anytime soon. Now that could change, but I don't see them fading away. So that's why I'm comfortable adding to my position in dollar cost averaging. I'm underwater.
Yeah.
Not bad, because I've dollar cost averaged many times, but I plan on holding this past 2030. So we'll see what happens. I mean, look, this is on the growth side, it's on my speculative side. So it's money that whatever happens, happens. It's not going to impact me. So, no, I think that's the biggest thing. People need to have real conversations with themselves about how they invest,
Yeah.
and not and take it from other people and all the stories about how people went too deep into one stock and then they just get caught.
Yep.
So, do your due diligence. And just because I think it's going to do big things, I have the time where I can wait.
Yeah.
And look, this may not materialize next year. I hope it does, but it may not. But I have the time to wait. And I think that if you look at these companies that have gone down, there's some real opportunities if you have time on your side. And this is one of them, I think.
I agree. All right. There we go. Hour and 8 minutes. Thank you so much, Stephen, for hopping on. I know a lot
I
of people
can't
are going to
believe it was
value,
that
appreciate it.
long.
It was that long, right? It was a
Can't
good hour and
believe
eight
that.
minutes.
Well,
It just flew
before we
by.
end, what was the thing that impressed you the most? Because you are a huge, people, I'm sure everybody who's watching this knows your interest, but you are huge into Palantir.
Yeah.
What made you diversify into this realm? Like the one thing.
Honestly, it was Galileo. I mean, like, because Anthony Noto was awesome. The personal banking side, like, I got it. I never cared too much. Now I downloaded the Sofi app. I'm like, oh, this is kind of cool because I've used Bank of America for 6 years. It just didn't impact me that much. Obviously, I've never been to a branch. I've had some overdraft fees, but it was never a pain point where I was like, I need to switch to some digital bank. I understand why there's a major bull case for it. But Galileo was the exciting part to me. They acquired the company for 1.2 billion back in April 2020, and as I've been digging in to understand, is there a AWS platform based approach to this company, I was like, wait a second, it is really hard to create a payment processing API. It is already very difficult to manage content being stored in a startup in a sophisticated way. There's thousands of little mini web services on AWS that we use. So I could only imagine the next Klarna, the next Affirm, the next Robinhood that's really trying to go after that market. If they had something like we have Amazon Web Services in 2007, Twitch, which was doing live video streaming, the
One of the
founder
best
has said many
acquisitions they made.
one of the best acquisitions they made. The Twitch founder, he talked about how they were literally like stacking boxes on top of each other because at one point they were growing, they had so much video being streamed. Like, where do you host all that video? And now I think about it, 15 years later, I start my first startup, and in a matter of 20 minutes, we're good to go. We have a domain name registered, AWS, everything's set up. That, yes, we have challenges here and there, but we've never had to worry about like servers. We just increase the servers and pay another $10 a month. Like, so to me, because as a startup founder, I've seen that my AWS bill is in the couple of hundreds a month, and like we can really scale something to the point where when it's at a couple of thousands, that means we have a lot of people using it, which is really good news. I'm imagining what a next fintech startup in 2025 is going to be able to do if Galileo is synonymous with what Amazon Web Services is for people like me. Because every time you watch a piece of content on Netflix, Amazon gets paid. because Netflix runs on AWS. Same thing with Spotify when you listen to a song. And that to me was exciting. And then I found out Chime uses them, Robinhood uses them, or at least on the debit card side. And
Mhm.
that's what got me into it. And then I got into personal banking and I was like, okay, there seems like there's a little bit of a bull case here. And then
And when
Noto.
you
I like
say
Noto a lot.
and when you say Galileo, we can't end without talking about the 200 trillion, not billion, 200 trillion opportunity.
Shout out to Tanner.
I mean, think about it. Business is archaic. You still have 50% of businesses writing checks. I
Right.
mean, you being a founder of a company built in the cloud, I'm sure that you read a lot of studies in Gartner and other places, and companies moving to the cloud is still kind of in its infancy. You still have companies on prem with stuff.
Yep. Yep. And there's some companies actually leaving the cloud because they're getting tired with some of the negotiations with AWS at Basecamp, for example. They put out a tweet that they're leaving, they're going
Yeah,
back
I
on prem.
mean,
And I
you
was like,
got hybrid solutions and whatnot, but at the end of the day, there's still a huge business to business opportunity out there for digitizing payments that
yeah,
Galileo can certainly grow from.
yep,
And look, there's always going to be competition. These traditional banks, most likely they're fine. You know, I don't think anybody is under the illusion that SoFi is going to take out one of these huge banks.
yeah.
Could have happened, yeah, sure. But I don't think anybody's under that illusion. I think that there's going to be competition. SoFi is going to push the envelope, and they have a 360-degree holistic approach of generating revenue as they build it out. And you named a firm, you named a bunch of other companies. They don't have what SoFi has.
Yeah, and that's exciting. If JP Morgan had the vision to build out some B2B to payments processing API technology that would try to attack the $200 trillion payments market, um, we would have heard something about them. Now they can in the future, but their core business is they have millions, if not hundreds of millions of people around the globe that use their banks, which means they get to lend out that money and they have a very solid business that's probably not going away anytime soon. SoFi sees an opportunity. And when your business is stale and bureaucratic and you're not really innovating as much in a particular market around B2B payments, and SoFi is, even though they're the $5 billion company, there's an asymmetrical bet there. And that's what makes it exciting to me.
There's a lot of potential. So that's why I'm in it. Look, I said Bank of America before. I'm a shareholder of Bank of America and C. Okay. There's just a lot of potential when you look at the younger generation. I think SoFi has something unique and they're going to keep building it. It's going to be very interesting to see what they do in the next several quarters. And I look forward to the earnings calls and I look forward to Noto and LaPointe speaking at different conferences and more information coming out. And see what happens in 2023. The Bears have been correct. No question about that. I've been incorrect. Let's see what happens in a year or two. We'll reassess. I mean, I'm always fine reassessing. You always have to reassess your positions. And it's not time. I mean, you know what I said about Palantir. I'm giving them 3 more quarters now because I was
Yep.
really upset. And if we get that Alex Karp next week, what is it, Monday they report?
Yeah. Yeah.
We get that Alex Karp that's been on the interview trail that actually looks like he got some PR training, I'll be very happy and I'll be ready to reassess then. But, Palantir is in my reassessment camp. I'm still bullish on them, but I wasn't happy. SoFi hasn't given me a reason not to be happy yet. So we'll see.
Yeah. Yeah. I agree. All right, Stephen. Thanks
All
for
right.
being on. I think
Very
people are going
fun.
to
Thank
enjoy
you for
this one.
having me. All
Yep, I'll
right.
put your Twitter in the description, Seeking Alpha in the description. Everyone can check him out. I definitely recommend following. Just really, really awesome guy when he talks about stocks and really, really in-depth articles when he writes 4,000 words. And he wrote that in like a night, right? 2 nights, maybe?
4 hours.
4 hours. Yeah. You said in the morning, hey, I'll send it to you. And then in the night, he's like, here's a copy. I'm like, oh, that's a lot. That's
You
quick.
know, when I got home from work, I wrote it, and you know. But keep in mind, that would have taken me a lot of time if I wasn't familiar with the company. I was
Exactly.
already
Yeah.
very familiar with the company. It's like me writing something about Amazon or Apple. I could recite their balance sheets and income statement. So
Wow.
it's not, I mean, I'm going to be writing an article on Amazon this weekend because I'm not happy with their cash flow statement. People are overlooking that, their cash from operations. has been down, down, down. It just went up a little bit on the trailing 12 months this quarter. But if I remember correctly, it's gone from 59 billion to 39 billion. And I don't like seeing cash from operations decrease. So I'm going to be writing something about that. And shareholder, love Amazon, but not happy about that. But yeah, I was very familiar with this. Took me maybe 4 hours to write it. And if I didn't have the knowledge on it, that would have taken me a week to write. So it's not that I'm some magical writer, you know?
Yeah. All right. Awesome stuff. Thank you, Stephen, for joining. Thank you, everybody else. Check them out in the description. We'll see you on the next one.